Let's be honest, having bad credit can feel like a huge financial roadblock, especially when you need a loan. You might think, will anyone even approve me? Or am I stuck with crazy high interest rates forever? Well, here's the good news. You can get a personal loan even with bad credit, but, and this is a big but, you have to be smart about it. Because for every legit lender out there, there's also a scammer waiting to take advantage of people in tough situations. So in this video, I'm going to break down what lenders actually look at. It's not just your credit score. The best loan options for bad credit, red flags and scams to avoid, and how to boost your chances of getting approved. Stick with me, and by the end of this video, you'll have a clear game plan to get the loan you need without the stress. Okay, first things first, yes, your credit score matters. But it's not the only thing lenders consider when deciding whether to approve your loan. In fact, some lenders focus more on other factors like your income. Do you make enough money to afford the monthly payments? Your employment history. Have you had a steady job or are you constantly changing? Your debt-to-income ratio. How much debt do you already have compared to your income? Loan purpose. Some lenders want to know why you're borrowing money. Debt consolidation, home repairs, emergency expense. Even if your credit score is low, a steady income and low debt can make lenders more willing to approve you. Now, not all loans are created equal. If your credit score isn't great, you don't want to waste time applying for loans that are just going to reject you. Instead, focus on these options. Online lenders, best for bad credit loans. Many online lenders specialize in personal loans for people with bad credit. They use alternative ways to evaluate you, like income and employment history. Some good ones to check out include Upgrade, Avant, and OppLoans. Just make sure to compare rates and terms before applying. Credit unions are more flexible than banks. They are often more willing to work with people who have less than perfect credit. Since they're non-profit, they usually offer lower interest rates than traditional banks. If you're a member of a credit union or can join one, this might be your best bet. Secured personal loans use collateral to get approved. A secured loan requires you to put something up as collateral, like a car, savings account, or even a certificate of deposit. If you fail to pay, the lender can take your collateral, so be careful. But because it's less risky for them, you'll have a much better chance of approval and lower interest rates. Cosigner loans let you borrow with a little help. If you have a friend or family member with good credit, they can cosign your loan. That means the lender will consider their credit score instead of just yours. This can get you a much lower interest rate. But be careful. If you don't pay, your cosigner is legally responsible for the debt. Not all loans are good loans. Some companies prey on people with bad credit, trapping them in never-ending debt. Here are the biggest red flags to watch out for. Payday loans. These loans might seem easy to get, but they come with insane interest rates, sometimes over 400% APR. They trap you in a cycle where you keep borrowing just to pay off the last loan. No credit check loans. Sounds good, right? Nope. These usually have sky-high fees, crazy interest rates, and shady terms that make it almost impossible to repay. Upfront fee scams. A legit lender will never ask for money before approving your loan. If someone asks you to pay an application fee or a processing fee up front, it's a scam. Too good to be true offers. If a lender promises guaranteed approval with no requirements, be skeptical. No real lender can guarantee a loan without checking your financial background. Even if your credit isn't great, there are ways to improve your chances of getting a loan. Here's what you can do. Check your credit report for errors. About 1 in 5 credit reports has a mistake that lowers the score. Use free services like annualcreditreport.com to check yours and dispute errors. Pay down debt if you can. Lowering your debt-to-income ratio makes lenders more likely to approve you. Even paying off a small debt can help. Apply for the right loan. Don't just apply everywhere. Too many applications can hurt your score. Focus on lenders that specialize in bad credit loans. Consider pre-qualification. Some lenders let you check your rates without affecting your credit score. Always do this first. Having bad credit doesn't mean you're out of options. It just means you have to be smart about where and how you apply. Stick to reputable lenders. Avoid payday loans and scams. Improve your chances by checking your credit and lowering debt. If you found this helpful, do me a favor, hit that like button and subscribe for more personal finance tips. And hey, drop a comment below if you've ever had a bad credit loan. Was it a good experience or a nightmare? Let's talk. Thanks for watching, and I'll see you in the next one.